Most people think an IPO or an initial public offering is just a company listing on the stock market. It isn't. It is one of the most carefully engineered financial events in the world. In the next few minutes, I'm going to explain why trillion-dollar companies only sell tiny pieces of themselves, why Wall Street still allocates IPO shares using phone calls, why giant IPOs sometimes don't even start trading for hours, and why banks actively manage who gets access, why companies like SpaceX are almost impossible to value properly, and why a successful IPO doesn't necessarily mean a successful long-term investment. Because when you really study how a company like SpaceX goes public, you realize modern financial markets are far less automated, far less rational, and far more narrative driven than most people imagine. Let's talk about SpaceX today. Reports suggest it could eventually be valued somewhere around 1.5 trillion to 1.75 trillion dollars. That would instantly make it one of the largest companies on earth. But the IPO itself may only sell around $80 billion worth of stock, about 5%. And that immediately confuses people because they assume IPO size equals company value. It doesn't. An IPO only sells a slice of the company. If a company is worth $1.6 trillion and sells 5% of itself, that's roughly about $80 billion IPO. The IPO is just the portion entering public markets, not the whole business. And it's quite important to understand this distinction because most people mentally combine the company, the hype, the valuation, and the stock itself into one thing, but they are actually quite separate. A great company is not automatically a great stock. A huge IPO is not automatically a great investment. And excitement around a business can become completely disconnected from the economics of owning shares in it. But honestly, the valuation maths isn't even the most interesting part here. The truly fascinating part is how IPOs actually work behind the scenes. Because despite all the technology we have these days, the biggest IPOs in the world are still coordinated manually by investment banks. Literally. Banks sit on phones calling institutional investors directly. They ask, how many shares do you want? What price are you willing to pay? Are you planning to hold the stock or flip it immediately? And the investors game the system too. Large funds often request far more shares than they actually want because they already know that allocations will be scaled down. So the order book becomes this strange combination of negotiation, signaling, relationship management, and strategic bluffing, which is wild when you think about it. Because people imagine markets as these hyper-efficient automated systems driven entirely by algorithms. But when trillion-dollar companies go public, human relationships suddenly dominate the process again. And this is also why giant IPOs don't always begin trading at 9:30 in the morning in the US. People assume stocks just go live at the market open, but massive IPOs can open hours later because exchanges and underwriters are still trying to stabilize the opening trade. They are balancing buy orders and sell orders in real time, trying to find a price where the market won't completely break apart instantly. In fact, exchanges literally run simulated stress tests before major IPOs. They create fake order flows and rehearse massive spikes in activity just to make sure the system can survive the launch. That's how fragile these moments can be. And I think it's worth mentioning that there's another element to it which most people don't think about. Wall Street doesn't just care about demand. Banks actively prefer investors that they believe will hold shares long term instead of dumping them immediately after the launch. Because if too many investors flip the stock on day one, the IPO can become an absolute disaster. And this is why retail investors usually get terrible IPO allocations. Not because there isn't demand, but because institutions are prioritized first. The banks want stable shareholders, large funds, relationship clients, people who help maintain orderly trading, which means IPOs are not simply the free market deciding a fair price. They are highly managed liquidity events. The allocations are curated. The, the opening price is managed. The investor list is screened. The order book is shaped deliberately. And once you understand that, you start seeing markets quite differently. You realize that financial markets are still deeply influenced by institutions, incentives, relationships, and power structures behind the scenes. The technology changed, human behavior didn't. But then we get to the biggest question of all. How do you even value a company like SpaceX? Normally, when investors value businesses, they try to estimate future cash flows, right? Using the DCF, discounted cash flow model. How many cars will Tesla sell, for instance? How many iPhones will Apple sell? How many subscriptions will Netflix have? How many burgers will McDonald's sell? But how do you value a company whose long-term vision includes planetary internet infrastructure, AI data centers, space manufacturing, space tourism, asteroid mining, and eventually putting humans on Mars? At some point, the valuation stops being traditional finance and start becoming a bet on civilization scale optionality. And that's what makes SpaceX such a strange company. At a valuation of around $1.5 to $1.75 trillion, it would become one of the most valuable companies on Earth. But based purely on current revenue, it would look dramatically smaller than many ordinary public companies, which means investors are not buying the present, they are buying a story about the future. And markets have always struggled with that, because once valuation becomes heavily dependent on narratives about the future, precision starts becoming an illusion. You can build discounted cash flow models, you can estimate terminal growth rates, you can create elaborate spreadsheets, but eventually the exercise becomes philosophical. How much is the possibility of a Mars economy worth? How much is a global satellite internet network worth? How much is the infrastructure layer for future AI systems worth? Nobody actually knows the answer, in all honesty, and that's why analyst estimates for visionary companies vary so widely. Even Tesla today has valuation estimates ranging from hundreds of billions to several trillion dollars, depending on who you ask. The same thing is now happening with SpaceX. Some investors think it could become one of the most important companies in human history. Others think the valuation is detached from economic reality. And honestly, both arguments can exist simultaneously. Because when narratives become powerful enough, markets stop pricing what exists today and they start pricing imagined futures. Sometimes those futures arrive, sometimes they don't. And this is where investors need to be very careful, because a successful IPO is not the same thing as a successful investment. Those are completely different questions. An IPO can generate enormous hype. Banks can perfectly engineer the launch. The stock can surge on the first day. Financial media can call it historic. And the investment can still disappoint over the next 5 years. History is full of examples where giant IPO excitement eventually faded once reality and valuation collided. Because IPO are optimized to raise capital and create a stable public debut. They are not designed to guarantee long-term returns for public investors. This distinction matters enormously, especially during speculative cycles, and I think this is one of the biggest mistakes retail investors make during major IPO moments. They confuse cultural importance, technological importance, media attention, and investment quality as if they are all the same thing. They are not. A company can completely change the world and still become a disappointing stock if investors overpay for the narrative. That's one of the deepest lessons in investing. The quality of the company matters, but the price you pay matters too. And in speculative years, those two things can drift very far apart. So in many ways, the SpaceX IPO is not just about one company. It's about something much bigger. It's about how modern markets price ambition, how financial systems price narratives, how institutions manufacture stability, how future expectations get converted into present day valuations, and how underneath all the algorithms and technology, markets are still ultimately driven by human psychology, fear, greed, status, stories, belief. That has never changed, and it probably never will. Until next time.